Apple's iPhone sales in China collapsed 24% in 2024, down from 51 million units in 2023 to 39 million. That's 12 million fewer iPhones sold in the world's largest smartphone market. And this isn't temporary blip from economic slowdown. This is structural shift driven by resurgent Chinese competition and rising nationalism. Huawei returned with Mate 60 Pro using domestically produced 7nm chip despite US sanctions. And Chinese consumers are choosing domestic brands over American technology at accelerating rates. Right now, Apple's China revenue is collapsing in real time. Fourth quarter 2024 revenue from Greater China fell 15% year over year. That's after falling 8% in Q3 and 6% in Q2. The trend is accelerating, not stabilizing. China represents 18% of Apple's total revenue, $90 billion annually. If China revenue falls by half over next 2 years, that's $45 billion gone. Apple's market cap could drop $500 billion on that news alone. This is existential threat to growth story that justified $3 trillion valuation. Counterpoint Research published data in January 2025 showing Apple's China smartphone market share fell from 19% in 2022 to 16% in 2023 to 13% in 2024. That's 6 percentage points lost in 2 years. Meanwhile, Huawei's share went from 9% to 13% to 17%. Huawei passed Apple. In China, the country where Apple built entire supply chain and generated 1/5 of revenue. This is catastrophic strategic failure. This crisis accelerated precisely when Huawei launched Mate 60 Pro in August 2023 using SMIC 7nm chip that shouldn't exist according to US export controls. The probability of Apple maintaining China market share while facing nationalistic backlash and technologically competitive domestic alternatives approaches zero. This is the pattern of every foreign company that dominated emerging market and then lost to domestic competitors. General Motors in China, Samsung in India, Western brands in Russia after sanctions. First, you're the aspirational choice. Then, domestic competitors improve quality. Then nationalism tips consumers toward local brands. Then, your legacy player losing share every quarter. And reversal almost never happens. Dan Ives, Wedbush Securities analyst covering Apple, stated in December 2024, China is Apple's Achilles heel. The Huawei resurgence combined with growing anti-American sentiment is creating perfect storm. We're seeing Chinese government officials and state-owned enterprise employees being told not to use iPhones. This is the beginning of potential de-appling of China. And there's nothing Tim Cook can do about it. Even more concerning, this is happening while Apple has no technological advantage anymore. Huawei Mate 60 Pro has better battery life than iPhone 15 Pro, better camera in some scenarios, satellite connectivity that iPhone doesn't have in China, and costs 20% less. The only advantage Apple had was ecosystem lock-in and brand prestige. But nationalism is breaking ecosystem loyalty, and domestic pride is replacing foreign brand prestige. The assumption that Apple's brand strength and ecosystem would protect China market share broke completely when geopolitics and technological parity combined to create mass switching to domestic alternatives. Here's what should terrify every Apple investor and American tech executive. If Apple loses China, it loses the manufacturing base that builds iPhones. 95% of iPhones are assembled in China. If Chinese government decides to retaliate for tech sanctions by disrupting Apple's supply chain, iPhone production collapses globally. Apple is trapped. Can't leave China quickly. Can't defend market share effectively. Can't influence Chinese government policy. This is strategic vulnerability created by decades of dependence on China for both production and consumption. Think about that. Before we break down exactly what happened with Huawei's return and how they built 7nm chips under sanctions, why Chinese consumers are abandoning iPhone for domestic brands, what this means for Apple's growth story and stock valuation, and whether Apple can recover or if China market is permanently lost. If you want to understand the most important technology and geopolitical story of 2024, hit that subscribe button and turn on notifications, because what we're revealing will change how you see US-China tech competition and whether American technology dominance is ending. Leave a comment. Will Apple lose China completely? Can Huawei compete globally against iPhone? And should Apple have diversified manufacturing away from China years ago? Let's start with what happened because the Huawei comeback was shocking. In 2019, US government put Huawei on entity list, banned American companies from selling chips and technology to Huawei. The goal was to kill Huawei's smartphone business, and initially, it worked. Huawei's global smartphone market share collapsed from 18% in 2020 to 4% in 2022. Without access to Google services, TSMC chips, or Qualcomm processors, Huawei couldn't compete globally. The business was dying. Chinese consumers who loved Huawei had to switch to iPhone or other Android brands. Apple benefited massively. Market share in China grew from 16% in 2020 to 19% in 2022. Huawei's loss was Apple's gain. Western analysts declared victory. Sanctions worked. China's tech champion was defeated. But they underestimated Chinese determination and capability. Huawei worked with SMIC, China's largest chip manufacturer, to develop 7-nanometer chip production using older DUV lithography equipment instead of cutting-edge EUV machines that ASML won't sell to China. This shouldn't have been possible. 7-nanometer production with DUV requires multiple patterning. It's expensive, low yield, but technically feasible. And they did it. August 2023, Huawei launched Mate 60 Pro with Kirin 9000's processor. 7-nanometer chip, made in China, by SMIC, despite sanctions. The phone sold out immediately. Demand was insane. Chinese consumers saw it as proof that China could overcome American technology blockade. Nationalism combined with genuine product quality created explosive demand. Sales data from China confirmed the surge. Huawei shipped 11 million Mate 60 series phones in last 4 months of 2023. That's comparable to iPhone 15 series launch in China, and momentum accelerated in 2024. Full year 2024, Huawei sold 47 million smartphones in China, up from 29 million in 2023. That's 62% growth year over year, while Apple fell 24%. The comeback is real. Huawei is back, not globally because they still can't sell phones with Google services in Western markets, but in China, which is world's largest market, Huawei is resurgent and taking share directly from Apple. Now let's talk about why Chinese consumers are switching. Because it's not just about the chip. Nationalism is a real factor. US-China relations are worst in decades. Trade war, tech sanctions, military tensions over Taiwan. Chinese government actively promoting self-reliance and domestic brands. State media celebrates Huawei's chip breakthrough as victory over American hegemony. Chinese consumers absorb this messaging. Government and state-owned enterprises are quietly discouraging iPhone use. Not official ban, but guidance. Recommendations, pressure. Reports from multiple sources indicate government officials being told iPhones are security risk. Use domestic alternatives. State-owned companies implementing similar policies. This affects millions of potential customers. Huawei's technology is genuinely competitive now. Mate 60 Pro has satellite connectivity for emergency calls in areas without cell coverage. iPhone has similar feature globally, but not enabled in China due to regulatory restrictions. So Huawei has feature advantage. Battery life is better, camera is competitive, performance is adequate for almost all users. The gap that existed when Huawei used to rely on imported chips is largely closed with domestic 7-nanometer chips. Price advantage is significant. Mate 60 Pro costs $799 in China. iPhone 15 Pro costs $1,099. That's $300 difference for comparable features. For price-sensitive consumers, which is most people, Huawei offers better value. Ecosystem lock-in is weakening. Apple's advantage was always ecosystem. iPhone, iPad, Mac, Apple Watch, AirPods all working seamlessly together. But most Chinese consumers don't own multiple Apple products. They have iPhone and maybe AirPods. That's not strong lock-in. And Huawei has built comparable ecosystem. Harmony OS across phones, tablets, watches, laptops. It's not as polished as Apple's ecosystem, but it's functional and improving rapidly. The combination of nationalism, government pressure, competitive products, better value, and weakening lock-in is creating mass switching. And once consumers switch, they realize Huawei is good enough. They don't switch back. This is one-way flow. Apple is losing customers permanently. Now let's talk about the revenue impact because numbers are devastating. Apple's Greater China revenue was $72 billion in fiscal 2023, fell to $67 billion in fiscal 2024. That's $5 billion decline. And this is with iPhone 15 launch. Next year will be worse. Projections for fiscal 2025 are 58 to 60 billion, another 7 to 9 billion decline, 2-year drop of 12 to 14 billion. That's 20% revenue decline in critical market. China is Apple's third largest market after Americas and Europe. but it's the highest growth potential market. China has 1.4 billion people. Only 300 million have smartphones above $300. That's billion-person opportunity for premium smartphones. If Apple loses China, it loses future growth. Americas and Europe are saturated. Can't grow there. China was the growth story, and it's evaporating. Margin impact is worse than revenue impact. China manufacturing keeps costs low. If Apple has to diversify manufacturing to India, Vietnam, Mexico, costs rise. Lower margins. Combined with falling China revenue, earnings take double hit. Revenue down, margins compressed. That's earnings recession. Stock valuation is based on growth. Apple trades at 28 times earnings. That's premium multiple, justified by expectation of continued growth. If growth turns negative because China is lost, multiple compresses to 20 or lower. Stock falls 30% from valuation compression alone. Add earnings decline from lost revenue, and stock could fall 40 to 50% over 2 years. This is not theoretical. This is what happens when company loses major market to competitors, and market is repricing Apple accordingly. Stock peaked at $198 in July 2024. By December, it was $175. That's 12% decline while market was flat. Market is starting to price in China problem. Now let's talk about manufacturing dependence because it's strategic vulnerability. Apple doesn't own factories. Contracts with Foxconn, Pegatron, others, all located primarily in China. 95% of iPhones assembled there. This made sense when China was low-cost, stable, and hungry for foreign investment. Not anymore. China's cost advantage is eroding. Wages increased. Regulations tightened. Foxconn is building factories in India and Vietnam. Apple is pushing diversification, but it's slow. China has infrastructure, trained workers, supply chain ecosystem. Component suppliers are all there. You can't replicate that overnight in India. India production reached 7% of total iPhones in 2024. Goal is 25% by 2027. That's progress, but it means 75% still in China. And even if they hit 25%, majority remains dependent on China. This is decade-long transition minimum. Geopolitical risk is real. If US-China tensions escalate to point of sanctions or conflict, Chinese government could disrupt Apple's supply chain, force Foxconn to stop iPhone assembly, or impose export restrictions on finished iPhones. Apple's global sales would collapse immediately. Can't sell iPhones if you can't make them, and 95% are made in China. Apple is trapped, can't leave quickly, can't threaten to leave as leverage, can't protect its market share. This is what happens when you concentrate everything in one country that becomes geopolitical rival. Decades of decisions optimizing for cost efficiency created strategic vulnerability that might destroy the company. Now let's talk about what Apple is trying to do, because they're not sitting idle. Price cuts in China. iPhone 15 was discounted 20% during Singles' Day shopping festival in November 2024. This is unusual. Apple rarely discounts, but desperate times. Sales improved slightly during promotion, but margins suffered, and consumers learned to wait for discounts. Destroys pricing power. iPhone 16 was designed with China in mind. Features specifically for Chinese market. Better camera for group photos. Longer battery life. Satellite connectivity if approved. Trying to match Huawei feature for feature, but execution is poor. iPhone 16 launch in China was weakest in years. Consumers are not impressed. Retail expansion. Apple is opening more stores in lower-tier Chinese cities, previously focused on Beijing, Shanghai, Shenzhen, now expanding to second and third-tier cities. But Huawei has distribution advantage there. Apple stores are premium experience, works in wealthy cities, harder to justify in smaller cities where Huawei and Xiaomi dominate. Tim Cook visits China frequently, meeting government officials, trying to maintain relationship, pledging investment, promising to support Chinese suppliers. But there's limit to what he can do. He can't change US government policy on Huawei sanctions. He can't make Chinese nationalism disappear. He can't make iPhone suddenly more appealing than domestic alternatives if quality is comparable. The reality is Apple has no good options. Price cuts destroy margins. Feature matching is reactive, not innovative. Retail expansion is expensive and slow. Government relations can't overcome structural trends. Apple is fighting losing battle, and everyone knows it. Now let's talk about Huawei's next moves because they're not stopping at smartphones. Huawei is expanding into tablets, laptops, smartwatches, all challenging Apple products. MatePad competes with iPad, MateBook with MacBook, Watch GT with Apple Watch, building complete ecosystem to trap consumers. And it's working. Once someone buys Huawei phone, they're more likely to buy Huawei accessories and devices. Ecosystem lock-in goes both ways. Harmony OS is being refined. It's not Android anymore. Completely separate operating system. This reduces dependence on Google and creates platform that Huawei fully controls. Third-party developers are building apps. Ecosystem is growing. In few years, Harmony OS could be credible alternative to iOS and Android in China. Export ambitions remain despite sanctions. Huawei can't sell phones with Google services in West, but they can target other markets. Southeast Asia, Middle East, Africa, Latin America, anywhere US influence is weaker. If they capture those markets, revenue grows even as they're locked out of US and Europe. Enterprise and telecom equipment business is still huge. Huawei makes networking equipment, 5G infrastructure, enterprise solutions. This generates 40% of revenue. Even if smartphone business was zero, Huawei would survive. But smartphone business isn't zero. It's growing. And combining consumer brand strength with enterprise capabilities makes Huawei more formidable competitor. The trajectory is clear. Huawei is not going away. They survived sanctions, came back stronger in home market, now expanding ecosystem and export markets. This is long-term competitor that Apple must face for decades. Now let's talk about implications for US tech dominance, because Apple's struggle is not isolated incident. Tesla sales in China are also declining, down 17% in 2024. BYD and other Chinese EV makers are taking share. Same pattern. Foreign brand initially dominant. Domestic competitors improve. Nationalism pushes consumers to local brands. Foreign brand loses share. Qualcomm and Intel facing similar pressures. Chinese companies developing domestic chips. Not as advanced, but good enough for many applications, and improving. Over time, US chip companies lose China market, which is 30 to 40% of global semiconductor market. Boeing lost most of China's commercial aircraft market to Airbus and Comac. Comac C919 is all Chinese aircraft, not as good as Boeing 737, but Chinese airlines are buying it anyway. Nationalism and government policy trump product quality. The pattern is US companies that dominated China market for decades are losing share to domestic competitors backed by nationalist government policies and improving technology. And once lost, share doesn't come back. This is long-term structural decline of US tech presence in China. For US economy, this is significant. China is world's second largest economy. Losing access to billion-plus consumer market reduces growth potential for American companies. Stock market valuations are partially based on China growth assumptions. If those assumptions are wrong, broad market reprices lower. For geopolitics, this is decoupling in action. US and China separating economically. Parallel technology ecosystems. Parallel supply chains. Parallel markets. This was inevitable once tech became national security issue. But speed is faster than expected, and consequences more severe. Now let's talk about whether Apple can recover China market, because question is important for investors. Bull case is this is temporary. Nationalism fades. Huawei's chip technology plateaus. Apple innovates with iPhone 17 or 18. Recaptures consumers. Market share stabilizes at 12 to 15%. Not great, but acceptable. Stock recovers. This requires several things going right. US-China relations improve. Unlikely. Chinese government stops discouraging iPhone use. Possible but not probable. Huawei fails to advance past 7 nanometer chips. Maybe. Apple delivers breakthrough product. Uncertain. Probability of bull case is 20 to 30%. Possible but requires luck and skill. Not base case. Bear case is market share continues declining. Falls to 8 to 10% by 2027. Revenue from China drops to 40 billion. Margins compress from manufacturing diversification. Earnings decline 20 to 30%. Stock falls to $120 to $140. Market cap drops from 3 trillion to 2 trillion. This requires current trends continuing. Nationalism persists. Huawei keeps improving. Apple fails to innovate. Chinese government maintains pressure. All of these are likely. This is high probability scenario. 60 to 70% chance. Worst case is full deappling. Chinese government forces all state employees and SOE workers to stop using iPhones. Market share falls to 5%. Supply chain disruption if tensions escalate. Revenue from China drops to 20 billion. Stock crashes to $100, market cap $1.5 trillion. This requires geopolitical crisis, Taiwan conflict, severe sanctions, not base case but possible, 10 to 15% probability, low but non-zero. For investors, risk-reward is bad. Best case is modest recovery. Base case is continued decline. Worst case is disaster. Why hold stock with that profile unless you believe in major positive catalyst that's not visible yet? Now let's address the counter-argument because Apple bulls have responses. They argue services revenue is growing. Apple Music, iCloud, App Store, all recurring revenue. High margins, not dependent on hardware sales. Even if iPhone sales decline, services sustain profitability. True to extent, but services revenue follows installed base. Fewer iPhones means fewer service subscribers eventually, and in China, many services are limited. Apple Music competes with local alternatives. iCloud has restrictions. App Store faces regulatory pressure. Services growth in China is constrained. Bulls argue emerging markets like India will replace China. India has billion-plus population, growing middle class. Apple is investing in manufacturing and retail there. India could be next China. Possible. But India's per capita income is 1/5 of China's. Fewer people can afford premium smartphones. Apple's India market share is 3%, growing but from tiny base. Even if India sales triple, it doesn't replace China revenue. An Indian market is competitive. Samsung, Xiaomi, local brands all fight for share. Bulls argue brand strength and ecosystem lock-in will prevent mass exodus. Apple users are loyal. Don't switch easily. Even in China, hundreds of millions are locked into ecosystem. Historically true. But nationalism is breaking loyalty. When government discourages iPhone use, even loyal users switch. An ecosystem is weaker in China than in US. Most Chinese iPhone users don't own Macs or iPads, just phone and maybe AirPods. That's not strong lock-in. The bull arguments are weak. They rely on hope rather than trends. Trends are clear. Apple is losing China. And losing China means losing major growth driver. If this breakdown of how Apple's China sales collapsed 24%, why Huawei's return with 7nm chip changed everything, what this means for Apple's growth story and stock valuation, and whether recovery is possible or China market is permanently lost, changed how you see US-China tech competition and Apple's future, hit that like button and subscribe. We're tracking every quarterly result, every market share report, every sign of whether Apple can stabilize China business or if decline accelerates. Leave a comment. Will Apple lose China completely? Can Huawei compete globally against iPhone? Should Apple have diversified manufacturing away from China years ago? Share this with anyone invested in Apple stock or anyone who thinks American tech dominance is permanent and unchallenged. After this, they'll understand why Apple's China problem is existential threat that could cut companies' value by $1 trillion, and why betting on Apple means betting geopolitics don't deteriorate further.